And you really highlight how deposit growth has outperformed your peers. What strategies have allowed you to differentiate yourself from the others?
Well, we've had great innovation in our deposit products over more than a decade, and that has differentiated in a number of ways from our competition. We also have a fabulous marketing team and colleagues. Our colleagues are perennial J.D. Power Award winners for service. So that combination of trust and confidence in the brand, great customer service, and differentiated product has been very powerful as we've seen this past quarter.
Stabilization in deposits, that's what Wall Street wants to see. But what about lending activity, Stephen? Because whether you speak to a big hotel or a commercial real estate operator, they're really suffering because they're not able to take out a loan. When do you see activity or demand changing?
I think it's going to take a period of time yet. First of all, I think the questions about what the regulators are going to want by way of capital, Basel III implementation, TLAC, total loss absorbing capital, things like that, they have to be answered for investors to feel confident in the sector. And I think as they are answered, the underlying performance, at least at Huntington, has been exceptional on credit. And we're very confident in the portfolio of loans we have, including our commercial real estate loans. But you have to eliminate some of these uncertainties.
You mentioned a moment ago.
And then it'll put us in a position where we can open up.
You mentioned a moment ago.
As an industry.
You mentioned a moment ago that you have had some differentiated products that or approaches that have enabled you to attract deposits. Could you be a little more specific about what exactly those differentiated products are? And is it as simple as outpaying the competition for deposits?
No, our checking account products have been differentiated for, again, a dozen years. And while the industry's made some moves recently in the last year or two around things like overdraft, we put 24-hour grace overdraft in 13 years ago. And so there are a series of features and functions, Tyler, that distinguish our credit or our checking products. And standby cash would be an example. It's available digitally to our customers, no charge if they honor the terms of 3 monthly payments after they do a takedown.
So it's a way to be a more consumer-friendly banking experience for the people. Let me just ask you: you're out there in the middle of the country in Ohio. What are you seeing in terms of business conditions? We just talked a moment ago about the idea that the notions that we were going to have a recession in the midsummer of 2023 basically off the table now. What are you seeing?
Well, Tyler, our customers are telling us they have a good view of the second half, and they're optimistic. They're going to have a good year. Some will have a great year, but this is not an imminent recession. They're working on 24. They're doing things like managing their supply chain. That's better. Working on margins, making sure they pass through inflation, making good progress there. So there's an optimism yet about 24, albeit the sales pipelines, the backlogs, are not as firm at this point as they might have been a year ago. But businesses are generally doing well.